and remind me to let you all know that this webinar will be recorded and uploaded later to the YouTube Trade Ideas channel. If you happen to miss any portion of it, it's usually about 4 or 5 hours afterwards in the evening, you can get a copy of that on our Trade Ideas channel of what happened today. So thanks for showing up. Just so you know, the audience is muted, and looks like Mike C says the audio and visuals are fine. Thank you, Mike. Thank you, Christopher. Appreciate that feedback because you knew I was heading there next. So we got visual, we got audio. Let's quickly take a poll. As Scott usually does, so we can get just a bit of a feel here for who's showing up. The first poll, if I select launched, okay, are you a Trade Ideas subscriber? It's either yes or no. Yes, I have a current active subscription, or no, I don't. I've just heard wonderful things about it, and I'm in here to hear what's going on. And as soon as we get to a 65 or 70% threshold, we'll pull that vote. You guys are still voting, still waiting, getting close. All right. And we're getting close to a quorum here, and it's really close. It's basically 49-51. So basically a 50-50 split. The audience today, half of you all have a current Trade Ideas subscription. The other half do not. So let me close that poll. And of those that answered yes, I am a Trade Ideas subscriber, this question is only for you guys. So do you have a premium or a regular standard subscription? And again, this kind of helps us sometimes get a feel for how the content flow might go, and we can better understand the people in our audience. I'll give you all another 10 seconds on that. All right, so pretty good discrepancy here on this one. TI Premium is about 70%, and TI Pro Regular, the standard version, is about 30%. So consistently seeing the upgrade quality. People, a lot of people start at the standard and then move up into Premium. That could be the case here, but again, thank you all for your votes. Let me close that and bring back the Trade Ideas office hours right there. Okay. So with that said, the recording is rolling. The questions and answer box is open, and we have a webinar. Come on in and say hi, Jamie.
Hello, webinar. Hello, Steve.
Hello, Jamie.
And Andy, I know you're in the wings up there manning the questions panel. That's always appreciated. But yeah, happy Monday, everybody. Yeah. I think there's a band called the Happy Mondays, Steve.
That
Does that ring a bell?
Barely.
A long time ago.
I wouldn't know any of their songs.
Anyway, I just want to thank everybody for taking time out of their busy day to come hear what we have to say. Got some pretty interesting things to point out, trades to go over. We got to deal with Holly, of course. But before we get on to the good stuff, a quick memento to make the legal team happy, keep a few heart attacks from happening here. So those of you who attend on a regular basis already know this. For new people as well, just want to make sure that while you're here, everything that we share with you is for educational purposes only. We're not telling you to buy or sell anything. If you do need investment advice, please seek out a licensed individual, whether that be a registered investment advisor or a stockbroker. Those people can give you all the investment advice that you can handle. But as far as what we show you, educational purposes only. Okay. Now for the new people, just want to give them a quick spin of what we have in the community that is Trade Ideas. Not only is it the award-winning technology, which is, well, can't really say best in its class. It's pretty much alone in its class. It's all by itself. But other than the technology, the Traders Room is where the action all starts every day. It's free. You don't even have to be a Trade Ideas subscriber to get in there and utilize that. It's hosted by Barry Anderson. Does an excellent job of, keeping a room of 400, 500, 600 traders sometimes in line and keeping the information flow high quality. So if you haven't been going in there, you might want to check it out. Of course, today is office hours with myself and Steve. Steve takes the helm tomorrow on Tuesday for the Trade of the Week webinar with Andy. Middle of the week, we like to kind of change it up a little bit. That's why we bring in Dan Merkin and Brad Williams, the CEO and the CTO, give a little bit different perception, different flavor on the markets, always entertaining. Then Andy rounds out the 1 hour webinars on Thursday, and I ride shotgun with him. Recently, not so recently these days, not too long ago, I should say, we added the Friday support session, which is a 3 hour webinar. We do not record it, but it's really basically a room we set up every Friday so that anybody that has any questions about Trade Ideas, the scanner, or needs help setting something up, you can just come in there, ask your questions, get your help. The door's open for 3 hours. It's myself, Steve, and Andy. So keep that in mind as well. Subscriber growth since we launched the AI, off the charts. That is continuing. Now, not going to waste too much time talking about Brokerage Plus right now, but it's in beta. If you're a premium subscriber, it's free to use right now. And you'll be grandfathered in. If you traded IB, you can hook this thing up. And if you develop some good strategies with the backtester, you can enable it to auto trade. We've built in a lot of cool trading tools that aren't even auto trade related. But right now it's free for premium people. You'll be grandfathered in when this thing comes out of beta. It will cost somewhere in the neighborhood of $1,000. But if you're a premium subscriber right now, you're grandfathered in. So keep that in mind as well. All right, so as always, we're going to let Steve talk about the market in general, where it's been, where it might be going. We're going to do Holly recap, which basically for today's market, I mean, very solid performance. We'll go over those trades in detail. We'll also talk about expectations. In other words, before the session really got going, say after the first 15, 20 minutes, was the wind blowing? Was there any wind? If it was blowing, what direction and how hard? All right, and we can parlay that with what Holly did in order to set our expectations. If we have some time at the end, maybe, maybe not, we'll have a little bit of fun with statistics and an interesting little back test that I came up with.
Cool.
So Steve, if you're ready, I will pass the baton to you and we can get rolling.
All right, thank you, Jamie. So let me grab the presenter ball. And we'll just talk maybe 5-6 minutes here real quick about what's happening in the general market. And then we'll switch back to Jamie, who will talk about some of the trade ideas alerts and the artificial intelligence day today. But for those that show up frequently, they know that I like to start off by looking at the spiders. SPY has had a really nice uptrend that was essentially broken on Friday. I had mentioned even back here over a week and a half ago that price action was painting itself into a corner on some very large down spikes with big volume distribution type days, followed by just a small doji day, and then back up into the range on low volume. Then we had it again Thursday, giant downside volume, followed by a doji day with even bigger volume. A lot of sell volume happening Thursday and Friday. But then we kind of just pop back up here into a hammer on less than what we saw on the volumes last week. So half the volume today stabilizing versus extreme downside volume Thursday and Friday. But the big takeaway is here we are below this trend line. This trend line is something that's been holding very well going into the summer, midsummer, hitting late summer now, but this trend line is now closed below that. Action was closed below the trend line, I should say. And, you know, it's even coming off the heels of these wicks. You know, if you want to go back 2 weeks with us, we looked at the diamonds and we talked about, boy, this was not a really good looking topping tail in the diamonds and the spiders and the Qs. And ever since then, this market's been under pressure and been selling off on heavy volume days and bouncing back on lighter volume days. Well, we never really know until it's over that it was, in fact, distribution in hindsight, but this certainly does, to me, look like the hallmarks of distribution, which is basically institutions lightening their load pretty quickly up here at these levels and then backing away, letting the market kind of bounce back. So people that have been trading this market, you know, they are pretty much conditioned to buy the dip, kind of think that's what happened today. We got down and filled the gap here in the SPY. We took out Friday's lows and then bounced back into this range after this gap fill on the SPY. But again, was done so with very anemic volume. Only, I think, 1.2 normal relative volume, so 20% more volume than normal. Where on Thursday and Friday, the spiders were selling off at 2.5 to 3 times normal volume. So that still has my attention greatly for the most part. We tried to see some 3 o'clock or 3:30 buyers pop in the market today. We got a little bit of that, but it's just kind of quiet after hours here. Not a giant bounce back for the most part. Just kind of threw in a little bottoming tail hammer candle there, whatever you want to call it, but not a whole lot of vigor and bouncing off of the buy the dips like we've seen in the past. So making note of that. In the land of the Qs. Also, we have actually we have a couple. We have a couple gaps that could be filled. Well, this was the near-term gap that was definitely in play today if the market had continued to sell off. But the market took a breath, and again in the the Qs, big volume on the downside Thursday and Friday, and today kind of a day of rest on half of the volumes that we saw on the closes. So this is an interesting level down here, this gap fill. Kind of like the spiders filled their gap in the same measure today. But if things do happen to get ugly, I mean, way down here, we even have another gap at some point. If this market doesn't hold on and bounce back up and start making some higher lows and higher highs, we could see some sell activity. We won't know until it's happened, but again, 2 downside targets is this gap in the Qs and this gap over here. I think it was interesting to note, if I look at my single stock window here, the Qs closed negative. They never even got back to positive today. Spiders barely closed positive. The IWM wanted nothing to do with being positive. They're still negative on the day. And while we're at it, we can kind of back out here and start to see a really long support level that's being challenged yet once again. So if the IWM sees some deterioration in a close back down into this area down here, that's obviously going to be another red flag, especially for the small caps. And the diamonds, they barely closed positive as well. So the Qs really, they didn't bounce back like the other 3 ETFs. And I find that kind of interesting. There wasn't as much vigor in the Qs bounce back today as there was on the other indexes. Are you concerned about the 240.70 mark on the SPY? Well, I happen to just glance at that mark. Well, yeah, I mean, I've got that line triggered right here basically for the most part, and we can look at it. Back here it was resistance, pullback, low volume bounce, and then breakout of that level. So the level that Frank's talking about is 240.70. Yeah, I mean, that is definitely in the sights. Today, the spiders just happened to close their gap, but there's nothing to say that more selling might not be behind it. And so the next level of support I would be looking at is the old prior resistance becomes future support. It became future support right here, became future support here as it traded below and wicked back above. A little bit of sloppy support here and right on the nuts support right there. So this is definitely a good pivot line, Frank. That's good eyes on the 240.70-ish level. So other than that, again, the big takeaway was the Qs just didn't have any bounce on the positive side like the spiders did. They managed to finish up, 0.09%, but the Qs managed to finish down. The Qs managed to finish down 0.11%, 0.11%. Thank you. Anyway, I still feel there's winds of change in this market. Playing to the long side has not been as easy as it has in the past. Looking at the distribution days, look at this giant candle. Distribution, all selling, bam. Look at this day, all red, all selling, bam, distribution. 2 days in a row, bam, bam, 2 big giant days of volume. But you'll notice the up days and the bounce days are quiet. They're back down here. So, again, distribution is defined as looking in hindsight and seeing big red candles with unusually high sell volume sporadically, not hitting in all the market at once, but hitting it, letting the market bounce back, and then hitting it again. So that's my story of what's going on in the bigger picture, and I'm sticking to it. All right, anything you want to add?
Very good breakdown. Very good breakdown. All right, so let me take the baton back here, Steve.
Yeah, Mirko, support and resistance. Just real quick before you take it back, you can
Okay.
see some of the stuff going on here in support and resistance. Um, Now more than ever, more never had to in the past, but now we can type in a single stock like SPYs. Let me go ahead and turn off the properties of post market. Makes a little bit more sense. Okay, so if the market was on and the price of the SPYs were 242.90 right here, Trade Ideas looks at it and says at this entry point, this is your downside smart stop right there, 242.36, indicated by the gradient shading. And this up here is your target, smart target. Looks kind of interesting on the intraday here, but when we go back and look, we can kind of see what it was looking at on Friday and Thursday of last week, and even more so on the daily chart here. Take a look at this. The downside smart stop is superimposed on the daily, and look left. Comes right on over to the close of that perfect doji gap fill. So what I'm trying to say is here, farther back, support, resistance, support. Trade Ideas is locating the pivot levels for you, and it's showing you these levels as a smart stop recommendation and also a smart target, profit target. And we're not pulling these numbers out of thin air. There's a lot of special sauce that's going on behind the scenes here to look back and identify S and R levels and pivot levels and things like that. So, both myself, Jamie, Andy, we've all been extremely pleased having 10,000 hours each of looking at stock charts most of our life, half of our lives. We are really excited at the levels that the Trade Ideas technology and logic is coming up with for newer traders to show you really where the smart stop should be. So yeah, swinging and scalping as well. These levels will change as the current price changes. So you need to make note of, if you're going to use these properly, of what the entry price is on your entry and where that exact line showed up for your downside. Because if the price starts to decay a little bit, guess what? This might move down to the next level of support, but that's not pertinent to you. What's pertinent to you is where the smart stop was when you took the trade to start with, because that's what it's calculating on. You can see risk right here versus upside reward. Our risk reward is a good, probably a decent 1 to 2, risking 1 to make 2 type of reward. So it's a great guideline for people that want to use support and resistance programs. The yellow-orange lines I'm drawing, Mirko, I'm doing those on my own, but when you see the blue down to the gradient orange bottom, and on the right-hand side it says smart stop and smart target, well, yes, those are being done by the Trade Ideas logic. Exactly. All right. Sounds like I answered your question. Your turn, Jamie.
Perfect. And we'll get to Kevin's question while we're talking about Holly here. So let me grab the baton here. Okay, Steve, let me know when you have eyes on.
I gotcha.
We good? Okay.
Yep.
All right, so real quick here. Of course, everybody, I can't move quite as quickly right now because I'm on a lot smaller screen space. So give me 1 second here, and we're going to pull Holly from my other screen over. Pardon my jumbled desktop. All right. So before we get into the individual Holly trades, let me find my sheet again. What we're going to do is we're going to kind of go backwards here for a minute. I don't necessarily have these in any particular order. So before we get into Holly, I'd kind of like to explain how I perceived everything this morning, from the time the market opened, 20 minutes in, what I thought was going to happen, or based on the information that I'd taken in thus far, what was my perception? Because as we all know, it's really your perception that creates the reality that you exist in, whether it's trading or any other aspects of life. So what was Jamie's perception after the first, or right on the open, and then right up until the 20-minute mark? Now, some of you know what I'm about to talk about. If you're new, well, I'll do my best to explain it. And what we're going to talk about are the compare count windows. Now here's a screenshot that I snapped from Twitter. These were the compare count windows 20 minutes into the open today. So on the far right here, we have companies with market caps in excess of 5.4 billion. This one has a 4 billion minimum, and we've got companies capitalized between 2 and 4 billion here, and then anything under 2 billion in this window. So basically what these windows do is they look at high volume selling, and I keep a count in the first 20 minutes. High volume, that's kind of a relative term, but since our metrics, whether it be the 1 minute, 5 minute, 2 minute, 10 minute volume filters, we know what the average should be for every stock in the marketplace based on a smoothed out 65-day average. All right, so the system knows, well, in a 1 minute period, this stock should have traded this. If it usually trades 100 and it traded 300, therefore the volume is 3 times normal. Simple, but effective. So with institutional buying and selling, what we have going on in the open is a large portion of that order getting done, but they can't get it all done, but they leave footprints. So what do we have today after the first 20 minutes? We had 50-50 buying, selling, and 5.4 billion higher, a very slight leaning to the sell side on the 4 billion and up, 52%. Now, I can't even tell you the last time I saw 50-50 on one of these guys. It's been a while. 52, not much better. Typically, the little tipping points are, well, once you see something above 55, that's when things start to get interesting. Once you see it crack above 60, that's really when it gets interesting to one way or the other. Typically in a month, there might be 2 of those days. There might be 3 or 4, just depending on the month and what unfolds. Is it earnings, so forth and so on. Now, even more interesting over here, which corresponds with what Steve was saying earlier about the IWM, which is the smaller cap stocks, right?
Mm-hmm.
Just really could never get anything going there. It was at an inside day, actually, right? You know, just kind of a sloppy little chart. Lots of selling on the open. So basically, unless you're really wanting to hit a lot of the smaller cap stocks and you have an active short strategy in play, which a lot of us might be kind of gearing up for the short side, but we're still in a pretty good up market. We're just consolidating a little bit, perhaps at the lower range. Whether we bust down or go back up to the tops and pop new highs is unknown right now. In the meantime, all we can do is listen and try to react based on the data that we're gathering, all right? So if you're looking for short candidates, it would have made a whole lot of sense to go for the 4 billion and under market caps. These guys, what it told me is, you know what, with these readings here, you know, I typically like to see a little bit of unity across the board here. This was a little bit out of the ordinary. So when we're looking at what's driving the market lately, obviously it's been the big caps. The IWM just can't get out of its own way up there. But what this told me is like, man, you know what? I'm just going to wait. I'm going to see what unfolds. I'm going to give the market a little bit of time to, you know, tell me what it might do. All right, so that's my first leading indicator right there, the compare counts. So uncertainty. And of course, all we have to do is pull the chart back up, as Steve said, below the trend line. Of course, I think my trend lines, I got them a little out of whack here. But as Steve said earlier, you know, we cracked through there. We closed below. And so if anything, there's some uncertainty at these levels. Are we going to build a little base camp sideways? Are we going to stretch on down and hit these next levels, right? Are we going to go back to the top? So, you know, uncertainty was the theme this morning for sure. Now let's talk about Holly, all right? So uncertainty reigned in the first 30 minutes, in my world anyway. But then, of course, a little after 30 minutes into the open, we saw Holly starting to take trades. And sure enough, everybody that's been watching Holly, if you're a premium subscriber over the past months, weeks, year and a half, not many short strategies show up. They'll show up from time to time and they'll look really good from the statistical standpoint, and then a lot of the times they don't even fire any trades. Well, today we had a pretty decent short in ATI that actually set up very perfectly. And I think that was indeed the very first trade that Holly spit out today from the topping formation. Came into the session at 62%. So we know right off the bat, anything that comes out of here is statistically weighted to the tune of 62. Of course, this little guy spit out 2 today. won one, lost one for a rate of 50%. Of course, when we double click from Holly's blotter right here, we get the exact arrow where and pointing to the bar where the trade entry occurred. Blue line is going to be her entry signal. And of course, if we compress, I'm a little out of whack here on my 5 minute. It's not showing the stop loss, but we can easily reference the daily here. So the stop loss was up at 1946. Thing pretty much just took a dive as soon as Holly called it, bounced back up, took one more little gasp of breath, and then had a nice down move. And of course, you know, a lot of the times in this market, we'll see stocks maybe like what you see in this stock today, JOBS. It really did not care a bit that the market was down. Obviously, there were buyers in it. But the reason I pulled this chart up is just to show you we're still in a bull market because, well, typically we're used to seeing these guys. Rip, 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 little pullbacks, rip, pullback, and just nice fluid swoopy motion. All right. Now, even though this trade worked, man, they sure didn't take it easy on you. You know, hey, we're profitable. No, we're back up. Hey, we're profitable. We're ripping back up. And then, you know, getting pretty close to that line before it finally rolled over and went, and the sellers overtook the buyers. Not to say that there weren't a lot of short patterns out there that made a whole lot of sense. I could go back and we could play 20/20 trading all day and go, oh, well, look, that was a beautiful entry. That was a beautiful entry. Well, it might look like a beautiful entry, but was the volume there at the time? Because, you know, when we start building these, you know, when we start taking these trades, whether they're from Holly, whose strong suit is statistical probability, we know that anything coming from this model has the superpower of statistical probability. Now, when I'm looking for a lot of my other stuff, I need the pattern, but I also need the added volume. And you have to piece all these things together and go, okay, based on my expectations and what I'm seeing now, and is the volume there, then, you know, that's the other side of the coin. So, you know, of course, sometimes we see a little bit of both in the Holly trades, for example, in the Zoes trade today. Now, this was just a beautiful runner from the get-go. Now, of course, we're not seeing massive price movement over here, but it's the patterns that we're concerned with, you know. Sometimes we do get the stocks that have, you know, 50-cent clips instead of 10-cent clips, but that's kind of random. So what I really liked about the Zoe trade today is the fact that as the signal came out right here, now we see the open. It put in its high right here in the opening candle. So let's do this. We'll draw a line across and push it up here. And of course, the low was put in down here. So it was range bound. And then as it crept back up, boom, it pops that opening range. We get the signal from Holly, wake up call. What do we have? We had a little bit less than 50% odds today. Now, you may be asking yourself, well, why is something in there with less than 50%? And that's all going to boil down to the profit factor and the difference between the average winner and the loser. The lower you get, the bigger you want that spread between average winner and loser to be. And when I say the lower you get, the lower on the win percentage, the bigger we need that spread to be between average winner and loser. So that's why that little guy still shows up. And so we know we have pretty decent statistical probability, but on top of that, this is what we call an opening range break. All right, so we've got statistical probability coupled with the opening range break. If that happens to be your pattern, instead of just having that pattern in and of itself, you know you have it with statistical probability as well. So one of the nice little long trades that Holly spit out today. Now, trade count, you know, on a day where uncertainty kind of ruled the first 30 minutes, and of course, just flip back to the index one more time. What do we have here? We got 5, 10, 15, 20. So I'm sizing up, don't really know what's going on. I see selling in the small caps, and then, of course, even the SPY rolls over. Coincidence? Maybe. Whatchamacallit? I'm having a brain seizure here. When the studies are not on the chart, Correlation, there we have it. See, the old ticker was working to extract the word correlation from the data banks. Had a little brief outage there, but we're back online now. So a lot of the times, uncertainty, it's like they always say, never short a boring market or an uncertain market, right? Well, the SPY tended to fold over pretty good with the lower indexes. It might have just been the day. Over the long term, you might see a pattern developing there. But for a market that is kind of peeled off, and then we had a little bounce down here, that's when Holly really started packing on one more short, but pretty much all the rest were longs, okay? And on a day where it just didn't really look that good for anything, but when I see uncertainty with the compare counts, and then I see the highly advanced statistical model saying, you know what? I see statistical probability here. That's what I want. That's what I want this thing to do. I want it to help me when I, the human, can't see the advantage, the statistical advantage underneath the first layer of data. So that's why I'm very pleased with Holly's performance today, because there was risk on opportunity all over the place. So let's go into a little bit of detail here about what risk on is versus risk off. And once you take it from a trade by trade standpoint, it makes a lot of sense, and it's not really that difficult to wrap the old brain around. So let's take the PanW example. Double clicked here, here's where the signal came out. Does a little sideways shuffle here, takes a little swoon. Now, of course, that's what stop losses are for. If we're wrong, we're gonna get out. Gets about halfway down there before it does a little mini horseshoe there and turns back up. So, lots of different ways to interpret the data, whether you jump in with Holly here or whether you wait. Now, if it goes, you miss the boat, but sometimes with a little chart reading skills, we can get a better price than Holly. So maybe we took a little bit here, we get a little pullback. Once we see this wick go in and these green bars develop, maybe we take a little bit more below this line. So we average in a little bit as the water takes us downstream and we get back up to this crucial point here. Now, of course, once we get up here, what's happening? What else is happening? What additional criteria are we starting to see? And that would be yet another range break. These are the previous highs that it put in, comes back, does the horseshoe. Maybe we take a little bit more, maybe we sit with what we have, but we can see the volume bar corresponding. The volume's good right here, and all we have to do, if we have the stock pulled up, there's a wide variety of windows where we can show this data, is as this is occurring and you're thinking, should I add a little bit more? Well, how's the volume? And of course, strong volume is going to be a little bit different of an answer depending on the trader that you speak to, but I think more importantly, I want the volume to be strong when I'm about to trade the stock. I don't really care what it was earlier. I don't really care what it might be in the future. What about right now? Because I'm interested in getting in the money pretty quick, not having to sit a big pullback. It's never any fun. So we can consult the 5-minute and the 1-minute, always very good metrics for the short term. Value of 100 is normal. So when you see 200, 300, it's a good thing. So another opportunity here to leverage a position, and we can also see why Holly got out of the trade. Profit save. Holly takes 25 cents. I'm seeing risk on. If you held the thing all day, would have yielded 59 cents. So the darkly shaded area here is Holly exiting her trade under profit save functionality, which is basically her version of a trailing stop. We don't want Holly to give back green, let it turn red. It's a real quick way to not make money with any system. So that's why you'll see her getting out sometimes with profit save. So if we see Holly getting out right here, we can exit with her if we feel comfortable. Or we can say, no, I think there's more in this trade. I see Holly getting out. I'm going to hold it. I'm going to try to make more. That is you going risk on. I'm accepting more risk to try to make more, and that's it.
And typically when we have a day like today where the damage was done earlier in the morning and then the rest of the day was a slow drift upwards, it's not surprising to see the risk on that has some open long trades in there generate some additional alpha as the market drifts back higher today only.
Indeed, and also too, if we do look at risk off, moderate gains, risk on yielded about almost four times that amount. And we can demystify risk on by just looking at each individual trade. Hey, Holly's getting out right here. Let me put an arrow. Okay, here's what I'll do. I'll stay in the second, I'll get out of half my position with Holly. I'll stay in the other 100 and try to eyeball a decent stop area. Now, of course, if we would have picked this little guy today, it probably would have just nipped us, right? Right here. Or we can go all the way back to the entry signal and go, you know what? I took my money on the first one. I'm willing to give this other one back to flat. Had we done that, we would have stayed in it. And that's not a bad methodology, because you lock in your profit on the first lot, you either flat the second lot or you make a lot more. But the bottom line is you're going to net on that trade. Second side of the coin, once you're profitable, how do you handle it? Very important. So,
you ready for a question?
I'm sorry.
Oh, I had a question.
Absolutely.
Okay. And it's related to Holly, and I'm going to read it, and I'm going to read it in its full. I think there may be some misconceptions in there, so we'll try and straighten that out for you, Kevin.
Let me have it.
Kevin says, I know right now Holly takes strategies after hours based on big sell-offs or buys. I'll come back and qualify that. Lately, is there a chance some strategies might activate an hour or so into the day? Asking because of the big sell-off day with no active trades. Okay, there's a couple things in there. First off, the
Right.
AI does not take trades after market. I think what you're confusing is the AI goes back into her cave and goes into a million back tests and tries to create and do a new combine and let the scores of the strategies come to the top based on a new day of market data that we've added. And so there is no aftermarket trading. What's happening aftermarket is the AI is going back and doing the machine learning process, okay, after hours based on big sell-off. So if there is an after-hour big sell-off or or a previous day big sell-off, all of that data will go into the hopper to help try and see which strategies are working best in the current environment. So I think that's where you were talking about. The after hours is where the next day's strategies are being formed through a meritocracy system of back testing. The second part of your question is there a chance that some strategies might activate an hour or so into the day? There's always that chance. But bleeding into your third, and to clarify that, there's always that chance, but we don't control that. The AI is basically turned on and left alone. And what you guys saw on Thursday of last week was only the second time in history of the AI that there were 0 trades taken. Mm-hmm. The other time was Brexit. Okay, so 2 extremely volatile down days where Holly came into that day with, not a whole lot of preparation for a giant market sell-off. It's just going off of, the prior 64 trading days, and each new day is a bit of new information. So I think on that one particular day, the AI came in with nothing but long strategies, and there was just never a reason, a statistical reason, or a moment of probability, if you will, for the AI to suggest a trade in a down environment like we had on Thursday. So what does that mean? It means we look at the AI as our canary in the coal mine. All right. If the canary in the coal mine has long biases and is not trying to catch a knife or pick a bottom in this market, chances are we probably should be paying close attention to that canary in the coal mine and what that machine is doing.
Right, Steve. And I see a couple more questions popping in. Keep in mind, ladies and gentlemen, I'm on Pacific time zone, so the market opens at 6:30. Okay, everybody has their own time zone. So, and just to clarify one more time, no, you'll never see a Holly trade trigger pre-market, only in the regular session. All right. And to clarify what Steve said about no trades on Thursday, correct, because if I had to call anything, or if I had to label Holly with a characteristic of a human being, she is the ultimate pragmatist. Okay, the market has been up, so the data is going to tell her long strategies because the back testing shows that. The market has to actually change a little bit before good data sets to the downside start appearing. All right, so that's how it works. I mean, imagine each strategy as a 3-dimensional object or a door, and it's got a really odd shape to it. and only a certain thing with that exact shape can fit through it, right? Well, on Thursday, none of those things that could fit through the door showed up. Some other things tried to get through there, but they weren't the right shape. You know, Holly's traps are very specific. We could call a strategy a trap that she sets. All the work is done the night before, the traps are laid, and if the statistics line up, the things fall through the traps, and we get trades out of Holly.
Real quickly, John asked a question. Well, okay, that begs a good question as we're talking about trade frequency. You know, we know what no trades look like and a couple trades look like, but what is a typical week? Well, I would go out on a limb and say a typical day for Holly trade suggestions is going to be anywhere from 12 to 30. I mean, would you agree on that, or would you adjust that at all? That's kind of a normal
Right. I
day.
mean,
Maybe
you know,
15
hey,
to 30.
we keep that data in our database. I just don't have it readily accessible right now.
Using
But
my own
I'll
brain.
even
Yeah.
I'll say this. If things are very active, if the statistical probability, which we could equate to the wind, is blowing fiercely, you're going to see a lot more trades than if the wind is not blowing fiercely, right? More wind, the faster the pirate ship goes. A little bit of wind, it's going to go kind of slow. If there's no wind, then on Thursday, you could say we were definitely in the long side statistical doldrums.
Okay, so there are no AI strategies that look for options market strategies. The way I just answered that person is if you see something that you like on the chart that was brought to your attention and you're an options player, well, then maybe you should just start with the symbol and look into the options market therefore. But to clarify, there is no single strategy that pops out that's looking at options, put call volume ratios, or things like that. We do have a channel called the options channel, which gives you some customized alerts. But basically, again, it's focusing on put volume and call volume, and trying to find things that are in motion with a lot of explosion in the options pits, so to speak.
Right, and you know, of course, typically people like to have pretty liquid stocks when they're trading those options because you know should be kind of a correlation there. But if you see a high volume stock pop up on Holly, if the stock's going to move, typically the options are going to move in unison, especially if you're playing the in the monies. So people use our product all the time to find good options trades, but we don't have any specific strategies in which Holly is looking at specific options data.
So I'm answering a question here quickly. He's asking about the can you put the download info for this single stock window? Not quite sure what you mean. I was wondering if
Are you asking for this? Is he asking for this window here?
Yeah, but for a moment I thought he was talking about actually can you load the info for a single stock detail to trade out of it? You might want to maybe qualify your question, Bill, and we'll be happy to make sure we get you set.
Right. So hey, we've got a very active crowd today, Steve. I'm glad to see all the questions coming in. Let's just check the time where we're still doing good. So to recap, I wouldn't even say pretty, a very strong performance from the AI today, you know, in a very uncertain market, right? And so just keep that in mind. Holly brings statistical probability to the table. Ask any other trader out there that you know. Ask them, are you using statistical probability in your trading routine? And if they say yes, ask them how, because I guarantee you, nobody's doing it this way. All right. As Steve says, Holly goes back to her cave. She's back in her cave right now, crunching numbers, you know, mercilessly. And then the strategies that make the cut are going to show up. And I have to tell you, late last night when this strategy complement showed up, I'm like, sounds good to me, because uncertainty is here. You know, when we look at this action in the SPY, you know, as Steve was pointing out, you know, the rotation, in other words, the selling, and it's occurring on very high volume. These have not been low volume sell-offs. So when I see Holly going, you know what, after millions and millions of trades back tested, going over a core of 50 base strategies, only 4 make the cut, makes sense to me. Okay, so that's pretty much the deal with Holly today. Very strong performance, very followable trades. And then, of course, before we let her go, just want to point out one of my new favorite columns, the max profit column. Now this is only looking at risk off. So when Holly was in the trade risk off, I can see that she took 25 cents, but what was she up at the most? So 1, 2, 3, 4, 5, 6, 7. Did you throw out 7 trades today and were all of them profitable at some point? Ask yourself that question. Ask other people that question. It sounds kind of easy, but I think we all know much easier said than done, right? This always gives us an out, right? So think about that. That's the power of statistics. All right, so we got a little bit of time here, Steve. So
Got something new to show them?
should we talk about fun with statistics?
Well, something new. It's in the works. Couldn't hurt.
Yeah. Well, because of course, earnings season always throws additional fuel on the fire, right? Things like to go up, things like to go down. There's earnings that fall in line. There's earnings surprises. We don't really want to get into that minutia. But what we do want to talk about is a little bit of fun with statistics, which just happens to include stocks that gap up more than 1 or 2%. So let me just clear some space here off my old travel screen here. And let's talk about, let's see, where did it go? There we go. Okay. Boy, gaps are very popular. Now, what people do with the gaps, who knows? Man, there's all kinds of things you can do with the gaps. You know, gap retracement, false gap retracement, the list goes on and on. But keeping in mind the day that we just had, which is this little guy right here, we had a lot of uncertainty in the market. But guess what? This little guy today only spit out 2 stocks right on the open. We had WUBA. Okay, here's the opening candle. So this little window was saying, hey, you might not want to leap in just headlong, but you might want to see what happens and what unfolds in WUBA here. Of course, if we review the history, of course, these things repeat. But if we stretch this out, come all the way down to right at the open here, what was it spitting out? WUBA, HLF, over and over again. Well, once again, let's just refresh uncertainty in the market, but let's take a look at what this guy did today. It had itself some fun to the upside. Doesn't care that the rest of the market's going down. So, you know, if you had a little bird, mainly this window going, hey, you know, keep an eye on WUBA or HLF, well, you would have been presented with some pretty interesting setups, low risk setups that continued higher for the rest of the day. In a very uncertain market with a lot of downward sucking action at the very beginning. So what is this guy? Well, now, of course, there's going to be a lot more of these trades during earnings season, but I'm going to keep monitoring this window because who knows, there might be more of these, and there just might be less of them moving forward. We'll find out. So all this little guy is doing, and once again, I like simple things that work, and it's pretty simple here. We've got min-max price. We've got average daily volume in the past 5 days of 300K, just to try to make sure that, you know, they're tradable. And sometimes you pull them up and the spread's too big and they're not, but we don't want to paint ourselves into a corner and overfilter. That's what we rely on our eyes for. Okay. The only reason I have the earnings in here is to get rid of the ETFs by de facto because they don't report earnings. So by de facto, it weeds the garden for me. And I don't have to maintain an exclude list, which, once again, simple, efficient. Now, gap up of 3% or higher, and this is a long strategy. So if we look at HLF and WUBA, they both gapped up at least 3% or higher. And not only that, but they kept on going, right? Which goes a little bit against our nature because we're like, oh, big gap up. Well, if it comes back, it's just too stretched too far. But that therein lies why we use statistics. Therein lies why we use Holly, because some of these data points we just aren't cut out to see. We like to see the pretty charts. We like to see other things. but this is statistical based. Now the trigger that I'm using is one of our alerts that uses the 1 minute time frame, which is the smallest time frame that we analyze currently. Now we have running down now, we have running up now, but I figured, hey, let's see what works better. And after a couple of back tests, running down took the prize. So let's just do a little back test here. Put this back on real time, quickly go over the back test results. And basically what we have here is, okay, let's sit out the first minute. We're gonna hold these till the end of the day. All right. So I've got my time of day, 1 p.m. stretched all the way out to the close. Risk management, we're just using the good old smart stop. And we're doing a 30-day back test. So this is going to be the epitome of what we talk about when statistics are in play. You can have something that wins a lot less than 50%, assuming your winners are multiples bigger than your losers. And of course, the interesting thing is the win rate on this little guy is going to be right at 30%. But guess what? It spit 2 out today and hit them both. So you could say expectations of 30, operating at 100 today. If it were in the Holly panel, that's what it would say. So we can see here, over the past 30 days, only 110 trades. Very manageable trade count. But of course, and I was just reading on the guys that follow on Twitter, his rule sets, and the fact that most people just can't handle losing anywhere between 6 and 7 trades out of 10, and they'll cut their winners too soon, and they won't manage their losers properly. Therefore, they go poof and evaporate out of the trading universe. But this kind of sums it up right here. Now, let's get this dialed in right here. I've got this strategy set up to do, $5,000 per trade, and you just get how many shares that'll get. Building in a $3 commission per side, building in 3 cents of slippage per side. It's telling me currently on the busiest day, let's just call it 36 grand. So on a 4-to-1 ratio, I would have had to have had 9,000 in buying power. Well, of course that just changed. Why did it change? That's why we built these little guys, so we can just click up. Okay, now everything's in place. Not bad on the projected annual and monthly, but more importantly, we've got a decent yield curve here. Only $1,000 difference between gross and net equity, which, by the way, a lot of back testers only show you gross. We give you the ability to fold in commissions and slippage.
Was there any particular reason that you did a $3 gap rather than a 3% gap?
Steve?
Did I catch you?
What?
Did I catch you off guard?
Well, you know what? It doesn't really matter if you caught me off guard, because it works. Now,
The back testing is showing that it's working, yes.
Yeah. But you know what? This is funny. This is really funny because, I started building this late at night, and I'm just like powering through it a few nights ago, right?
Mm-hmm.
I didn't even notice I'd done that.
Well,
and I got good results. But you know what? That's beautiful. I'm glad you pointed that out.
That's how Thomas Edison made the light bulb. He made a mistake.
I'm glad you pointed that out. It simply doesn't matter. Now, having said that, let's do this.
See what happens. And good job, Don Letarin, on catching that little nuance.
Now, just for the record, I had intended to use percentage because $3 is random.
Mm-hmm.
It's really random. So let's just take a look, see. And of course, you can see they're right next to each other. And when you're bleary-eyed late at night, it's really easy just to click there and go, get on with it. Boom. Okay, I did remove the $3 gap. All right, drum roll, please. Oh, and it's going to be better. Maybe.
You think it's going to be better?
Well, the win rate is now average winner versus average loser. Another question.
Yeah. Yikes.
Oh, I accidentally found something See?
Yeah.
Therein lies the beauty. You don't find anything unless you experiment, and sometimes what you think is going to work doesn't, and the other one does. Now, let's look at the daily. Yeah. See, this is nothing like this little guy right here.
Yeah, definite better histogram on distribution there.
So very interesting. Let's see, do I have the same criteria? Yeah, we just look how many more trades we have. You know, which leads me to the next point. Of course, this is what happens when you start going down this path. Okay, well, maybe there just needs to be a little bit more juice in there on the gap up. Let's take a look-see. What if we took this to 5? Would it matter?
We'll find out.
And of course, I know we're buttoned up against the end here, so one more little experiment. I just want to check it out, and then we'll let everybody get back to their day.
And then you owe the audience this alert, and then also your single stock window somebody was asking about, so you could drop that in the chat.
No problem. Okay, so we did get a better spread between average winner and loser here, but we, look at this. I mean, nothing compared. I'm gonna have to call this $3 gaps.
Something magical about the $3 gap.
I guess, and now I'm curious. I'm like, well, what if we took it up to $4 or $3.50 or whatever? But anyway, all right, yay. Okay, so I'm gonna copy this. I'm gonna paste it into the chat area.
Guys, if you're looking for copies of this, open up your chat window, the triangle on the GoToWebinar toolbar floating there, and it'll open up the window, and you'll see him pop in some descriptions and codes shortly.
Okay, $3 gap coming at you. If Jamie's fingers can function properly. All right, so we got that guy, and somebody wanted the single stock window.
Yeah, okay. Bill H would like the single stock window the way you have it.
Perfect, okay.
Configured.
And voila.
All right. More sharing.
All right, Steve.
More sharing.
Well, I hope that was entertaining. Once again, I'm tickled at that discovery, because we get busy, we don't notice, and turns out that my original idea did not work, and the mistake played out better than the original idea. So
again, Edison discovered the light bulb by doing something different that he wasn't intending on.
Right? So, wasn't it the telephone as well? Somebody did something. They're like, "Come in here, I need you," and that was also an accident. But anyway, hey, half the drugs out there that they're marketing to us relentlessly on these commercials every day weren't even invented for the purpose that they're using them for. So I guess that's a common theme with man in general, mankind, womankind, not to exclude anybody. So Steve, I think I'm done. Thanks everybody for coming.
Yeah, go ahead and pop your slides up there, and I'll walk everybody out the way Scott normally does. We like to reward everybody with a promo code. We'll get to that in a second, but the Friday podcast is one of Jamie's events, and they are released on the evenings of Fridays, recorded Friday after the close. Always have some interesting content on there. You can find that in the App Store or any other iPod distributor that you guys like to use. It's called the Trade Ideas Podcast. And what do we got next? Next, we have a thank you, a 15% savings off your first month or your first year of prepaid TI Premium or Standard. So that's going to knock, almost $15 off your first month, and then consider that you do get that one-on-one time, which is a $99 value, but you get that free on your first month. So we can really get you onboarded and pointed in the right direction, get you going, and let you make the decision that this hopefully is the right software for you. So this week, AI Trades, all capitals, that would be the promo code at checkout, and we'll save you on either the premium or the standard at 15% of your first year or your first month. So we hope some people take advantage of that. We do offer a test drive or open house, as we've called it in the past, but that's once every 3 months. We just came off another one, so it's going to be another 2 months or so before we open back up to a test drive for people. So if you're thinking on the interim, the immediate future here of trying trade ideas, I think for about $77 you can get a shot at the standard and get yourself a one-on-one session and start to build a knowledge on this platform that is being embraced at a parabolic level by our subscribers. And lastly, if you want to get a hold of us, I've dropped the info at Trade-Ideas a few times there. That's the main triage line. But if you need something for myself or Jamie, there are the emails, jhodge at Trade-Ideas and Steve at Trade-Ideas. You can follow Jamie on at QuantBot on Twitter. Myself is at TodayTrader, and CEO Dan Merkin is at TradeIdeas1. So a lot of the stuff that Jamie was showing earlier today on the first half an hour, the first 20 minutes of how to try and gauge where the sell and buy pressure is based on different levels of market cap, he tweets that stuff out in real time every day. So give him a follow, and the stuff that he shows you in hindsight, he's also showing you here in real time on his Twitter feed, so a good follow there as well. The phone number down there at the bottom really is for emergencies only. If you have an accounting question, chances are you're going to get a phone call back from us. But if you're looking for immediate help, the chat window at the bottom of our Trade-Ideas homepage is a great place to come in during market hours to get immediate help. And info at Trade-Ideas is the main line, where no matter what you send in, we will triage and direct to the appropriate person in the appropriate department so you can get a response. So Jamie, thank you for all that information. Thank you, Andy, for answering questions behind the scenes. And thank you all for showing up and asking questions and giving some of your input. Certainly do appreciate it. This webinar will be recorded and replayed probably in about 3 hours on our Trade Ideas YouTube website under the most recent uploads. So I thank you, Jamie.
Hey, always a pleasure, Steve, and thanks everybody for attending, and thank you, Andy, as well.
Yep, Andy and I will be at you guys tomorrow, same time, 5 o'clock Eastern, talking about some different ideas, additionally the trade of the week. And we'll have another day of market action under our belt to talk about. So thank you, everybody. Have a good evening, and we shall see you next time.
Bye-bye.
Bye-bye.